Bloom Ventures, India's leading homegrown venture fund with over $600 million in assets under management across 4 fund vintages, has announced that its inaugural fund, Fund 1, along with its extension fund, 1A, has realized close to 5x of the invested capital so far and is on track to realize close to 6x gross returns by its full life cycle in 2024. To elaborate on Bloom Ventures' journey so far and its outlook for 2024, joining me now is its co-founder and managing partner, Karthik Reddy. Karthik, welcome back to Startup Street. Now, Bloom invested Fund 1 and 1A in about 70 plus startups between 2010 and 2015. You've kind of pioneered the idea of institutionalized micro VC in the early days of venture capital in India. And speaking of pioneering, talk to us about the recently published Omega Files, which has all insights related to Fund 1 and Fund 1A. How did you come up with the idea, a first for a fund?
Thank you. Thanks for having me. Thanks for highlighting our story this evening. It feels like a nice year-end finish to 12 years of work, as they say. Everything feels like an overnight success, but it took a dozen years to get here. I think the Omega Files for us was a way of talking more openly to the ecosystem. Of course, it matters that we actually had a good run at Fund 1. It's a good return for what was predominantly an Indian investor base. Back then, we had believers who literally backed Sanjay and me on the strength of a PowerPoint pitch. We didn't have an institutional track record. We were setting the ground floor for many young managers to come after us. And I think that ecosystem of investors needed to see how does a fund play out over 10, 12 years? I remember a lot of people back then said 10, 12 years, please leave the room. Nobody expected, a lot of people along the way said, do we even know that you'll actually return multiples of the capital? We'll be happy if you return the principal. These are the kind of things we had to hear even mid-course in the fund. So I think to be able to suggest that it's possible in India, even in a tough environment when we started off in 2010, 11, was very, very, very important. Sure. And you're just showing TDV and SIDBI on the screen. I think that's the other, feeling that we had taxpayer money, we had government support.
Yes.
It felt like a very noble thing to sort of give back a multiple of that capital back to the government entities that backed us. Because other than that, only private individuals in India backed us. So it's a bit of, showing that it can be done, giving confidence to the ecosystem. Dozens of new managers have been born since 2015.
Yeah.
I think they're grasping for straws and saying, is this possible?
Okay.
And they all talk to us, they look to us, but this is a great way of showcasing all of that journey one shot for everybody.
Absolutely. Absolutely. Coming to, showcasing the journey, 17 companies, which are 20% of Bloom's portfolio, have generated 98% of the fund's gross returns. And within these winners, the top 3 made close to 3x of the entire fund. So take us through your top bets and the kind of impact you see them making next year.
Again, there is something that's talked about a lot. It's called the power law in the venture capital business, where usually this happens, where the top 10, 20% of the companies yield most of the financial gains. It's not like the other journeys were not worth it. They've all culminated in their own ways. But what matters to investors are these large outcomes, and those are the 17, and of which Grey Orange, Carbon Clean, and Turtle Mint are the big 3. It's not like, by the way, there's a curious side note here. A lot of the companies have moved on to what are called continuity funds, Fund 1X and 1Y. We talk about that as well in the files, which means the journeys are continuing. It's just that these returns are clocked inside of the original funds. So a unicorn like Purple is doing phenomenally well, but its returns are not in the top 3 in this fund. So it's just a question of when they were exited out from this fund. Those companies, Purple and Turtle Mint and Cashify, were exited in 21 out of these funds, so they're showing slightly smaller returns.
Okay.
Grey Orange and Carbon Clean, I think, are a very proud moment for India as a whole. We think they'll be amongst the top 5 first 5 deep tech unicorns in the country. So for us to have found a carbon capture solution and a warehouse automation solution back in 2011 and 12, and for them to become multi-$100 million value plus close to that much in revenue in the case of Grey Orange, I think it's a phenomenal, feather in the cap for the country.
All right, absolutely.
And both of these, curiously, were college startups.
Okay.
Both sets of founders came from colleges and never worked a day in their life.
Yeah.
So I think these are the highlights of those winners.
Absolutely.
And I think they're just about getting started. Yeah.
Absolutely. And Karthik, let's quickly talk about the outlook for 2024. You say you're on track to realize close to 6x gross returns by the full life cycle in 2024. What makes you bullish? What is the exit strategy? What sectors will you be betting big on in 2024? And if time permits, one advice you would like to give out to founders and investors?
Yeah, I think the first fund folks are very well sorted, right? If they've survived a decade, they've all kind of figured out paths to profitability, sustainability at this point. So I think that's what gives us confidence of culminating that fund journey with 6x. Even more interestingly, I think they will all, the top 7, 8, 9 companies will continue to bloom. And over the next 3-4 years, probably give us another 2-3x on top of this. So we could have a phenomenal sort of 15x story come out of these top companies. Why we are so bullish is, I think, when you had legacy companies being able to show profitability, I think the markets are beginning to reward that kind of performance. And you're beginning to see companies like FirstCry, and I won't be surprised if Lenskart comes soon. Mama just went public, Ola Electric filing for public. So I think the confidence that we have market leaders and new category creators which have the shot at turning profitable is getting well entrenched in the Indian public markets. And for the first time, though we used to think about, public is a very long last step in the journey, public markets and the confidence in that are going to drive, I think, earlier and earlier confidence down the value chain to Series D, C, E, B. And you just mentioned earlier in the program that you suddenly saw an uptick in December. I think it's a function of public markets driving that confidence. And advice is pretty much that, right? I mean, you have a finite amount of capital, and I think in India, the market is basically saying, show us sustainable, profitable growth, and we'll reward you in spades, both in public and private markets.
All right, Karthik. Unfortunately, we've run out of time, but many thanks for joining us today on Startup Street, and wish you the very best in the coming year.
Thanks for having me. Happy New Year to everyone.